You know what? Someone pay money for looking at my feet, I'd sell it. Good on her.
Fair play. Yeah. So that's like just a very good example of what a side hustle could be. There's all sorts with Shopify, isn't there?
Is that your best
platforms.
example?
I'm trying to recall some others. I've got some better ones.
Why did that one pop in your mind?
Because I actually think it's Gez. Hello and welcome to the Inside Property and Finance podcast. You're here with me, Steve Hand, and my business partner, Paul Rawson. And today we're going to talk about complex income, self-employed income and multiple streams of income. And the reason we're going to do this is because apparently 40% of the population have income from non-standard sources.
Non-standard?
So we know that it's a challenge for a lot of people when you're trying to get the maximum borrowing for your mortgage and you've got a main job and you've got a little bit of income on the side or a second job or a side hustle, just multiple streams, and you want to sort of pool all those together and use as much of it as possible. So over to you.
All right, thanks. I guess we'll start with who does this affect? Obviously, main residence applications, affects buy-to-lets.
Yeah.
Can even affect bridging and development.
Yes.
Especially if it's going on a service basis. So important across the board, I guess. So everyone listen up. It affects everybody. All right. So tune in. Right.
Yeah.
Concentrate. Complex income. That's quite a broad thing. I guess it conjures up to the listener. Oh, it's coming from abroad maybe, or it's from this thing I was left in trust a million years ago or something.
Yeah.
It can be something as simple as overtime, can't it?
Oh, yeah. I think back to a case, you remember, I won't mention the full name, but his name was Sam, builder from near us, and he had an offshore trust. It was in a Maltese fund, and we got a lender to lend on him eventually, but it was like so many layers to the income, and most banks were just like, no, we're not lending to that, it's far too complex.
Yeah.
But so that's at, like, let's say one end of the spectrum. And at the other end, you've got a lot of people nowadays where they might have their main job, their full-time job, and that produces the bulk of their income, but they've got a side hustle which might give them an extra 10 or 20, 50% income on top. But they do need a lender to take at least a proportion of that into account for when they go for a mortgage.
Yeah. So what's the solution?
The solution, well, it's understanding the lender's criteria. And again, we come back to that thing of a lot of people go and visit their own bank, don't they? And it's a little bit of a lottery, this, because with most owned banks, they're not necessarily going to take into account all that income. So coming to a broker, I would say, is absolutely essential when you've got a non-standard type situation.
I think I'd go as far to say that most people's own bank, let's be honest, is a high street brand.
Yeah.
Yeah. So I would go as far to say that in 99% of complex income cases, they ain't going to help.
No.
Unless you're only needing a fraction of your complex income to support what you need. But if you need a good proportion of it or all of it, don't waste your time.
No.
Yeah, computers won't say yes to that one. They won't understand it, will they?
No, they won't. When we think of the lenders that we get through, don't we, our top 20 lenders list that we get from one of the mortgage clubs. And when you look at the complex income, self-employed income, they tend to go to one of a few lenders, and it's not your big four or your big six. So, it's very important to speak with a broker. And under that bracket, I would put down people that have gone self-employed. They might have 1 year's accounts because the philosophy is that you need 3 years or maybe 2. But there are lenders where you can just use 1 year's accounts. And for some people, actually, the latest year could work because it might be that they've got 2 years accounts, but the first year was that low because of all the costs that you put through that taking an average of 2 years really impacts their ability to borrow. Whereas if we find a lender, which we can, that goes on the latest year, which is a lot more healthy generally, then they can get the borrowing they need.
Let's try and list all the things that you and I can think of that could be complex income to lenders, yeah?
Yeah.
Let's start at the employed person.
Yeah.
Yeah? So basic salary, not complex.
No.
Overtime, complex or not?
Can be if it's more sporadic as well. It's not every
be.
single week or month.
or the same amount.
Yeah.
Bonus, same thing.
Yeah.
Is it paid monthly, quarterly, annually as well?
Yeah.
Allowances
Allowances.
on
Yes.
wage slips.
Yes.
Some deductions on wage slips. You know, so I'm thinking at the start of this, we're just going to talk about a lot of self-employed people, and already, when you just start putting your mind back to
Yeah.
the person who shouldn't really be complex, and forget if they've got the side hustle as you're on about.
Yeah.
We're already.
Do you know, I think back to like fairly standard work, you would think, working for the NHS, massive employer.
Yeah.
But when you've looked at an NHS worker's pay slip, like some of them.
Oh, they're brilliant now.
The amount of things on there. And some banks won't take into account all those bits of income, if you like, that they've got.
Yeah, and worse still, sometimes we find that, or we know that they do, but their underwriters don't know that they do. And then we have to kind of force it up the chain a bit to get someone to go, actually, we do that, you idiot.
Yeah.
We can have the mortgage. So that's just employ people, isn't it?
Yeah.
Just employ.
Yeah, it's massive. But, I mean, the gig economy or the self-employed side of income has grown massively in the last 10 years, especially 10, 15 years.
Yeah. So side hustles could be they rent a room out.
Yeah.
They've got property in the background. They've got a little cottage industry. I don't know. I'm thinking of some. They make dolls and sell them at weekends.
Well, one of our friend Gez, he's got a client in Wales that puts shoes on, doesn't she, or wears shoes in a certain way, or sniffs them, or does something weird, and she makes a shed load of income from that.
I didn't know this. Really?
Did you? Yeah.
Really?
Yeah. I can't go into too much detail.
Is it his friend or is it really him?
It could be. It could be, you know. Yes, because the shoulder width looked quite similar in one of the photos.
We might need to have a little chat with our long-standing friend there from North Wales, from Welsh Wales.
Yes. But that, that started as a side hustle and became her main source of income.
Hey, each right. Hey, do you know what? Someone pay money for looking at my feet, I'd sell it. Good on her.
Fair play. Yeah. So that's like just a very good example of what a side hustle could be. There's all sorts with Shopify, isn't there?
Is that your best
platforms.
example?
I'm trying to recall some others. I've got some better ones.
Why did that one pop in your mind?
Because I actually think it's Gez.
Can't wait to see him.
Yeah.
Yeah, brilliant.
But what else have we got?
Yeah.
Because it does impact landlords as well. Some lenders aren't bothered, of course, with landlords, are they? The minimum income. But other lenders have got this minimum 25 grand income that's required. Yeah. And it can be employed, it can be other sources.
Some are very rare, but some are a bit higher.
Yeah.
But then also you've got the when we need to top slice income for buy-to-let landlords. Mm-hmm. You know, the rent, in a nutshell, if rent's not enough to support the mortgage, we can sometimes pull income on top of the rent to get the mortgage required, known as top slicing. Mm-hmm. But then again, it's back to income.
Yeah, it's quite common. There is a correlation, isn't there? The further south you go, like in London, because the yields aren't generally as high. Yeah. People get the capital appreciation generally over time, but the yields aren't as high, but then the salaries can be higher. Mm-hmm. So there's more of a salary to top slice from to top up that rent. Otherwise, there's plenty of cases where people can only pull out 50%, 60% of the value of their property, whereas in other parts of the country, they might be able to pull out 75% of the value of the property. So it enables them to then, use their equity for further purchases.
Yeah. So further in, self-employed people, obviously, they're going to be more complex by their very nature. Mm-hmm. You've alluded to the startup almost, high expenditure year one.
Yeah.
So can we get a lender to agree to go off year two? Mm-hmm. Actually, we can get them to go off year one sometimes,
Yeah.
Average of the last 3 years. They've got 3 years income, but that lender only uses the latest year, not the average, or average of the last two, or depends if the preceding year was higher or lower and all that kind of thing. And what about the self-employed, ultra-high earners? Mm-hmm. Yeah. So typically, someone, they make, I don't know, £1 million net profit. Extreme example, I know. It could be just the hundreds of thousands. But for tax reasons, they don't want to take that money. Mm-hmm. They just want to take what they need to live off.
Yeah.
Makes perfect sense. Yeah. But then they want to borrow based on what they
they know they can afford.
They know they can afford, but they've not taken it in dividends. However, the especially if they're the sole shareholder, it's it's complex to start with. It's not something that the high street would entertain necessarily.
No.
Although one of the high street lenders has a department that accommodates these things. Yeah. We can get them to look at underlying profits.
Yes.
Because if they need to take it, they can take it.
Yeah.
So yeah, it potentially, this is potentially a problem for. When you said 40% there,
Yeah.
I thought, God, that sounds high. But when we've just who can come into this category?
There's huge amounts.
Huge.
Yeah. Like when you think about it, that's just 60% have got the same salary week in, week out, or month in, month out.
Yeah.
And it's just very sort of predictable.
Yeah.
But then you've got, like you've just said, going from smaller earners where it's just spare change, pocket money, going right the way through to people that earn millions per year. But they might, again, take, if they can live off this, 100 grand for one partner, 100 grand for the other partner. So they still get the personal allowance. That's quite
I
common.
hope they can live off that. Otherwise, they've got some serious social habits, haven't they?
Oh, no, darling. Have you seen the cost of caviar these days? No, but 100 grand each.
Yeah.
Okay, so what's that? Maybe 10 grand, 11 grand into the house net income. If they can live off that, but they're generating £1 million a year in terms of retained profit, and as you know, there are lenders that will lend against that £1 million if they could take it. 5 times, as an example, £1 million means they could borrow £5 million, whereas most lenders will go on 5 times 200. £1 million is the
huge difference.
Yeah, massive difference.
And I know you give bigger numbers there, but the same principle applies to
the
lower earners, of course. It could be, instead of getting 5 times 50,000, they could be getting 5 times 100,000 or something.
Yeah.
So
makes a big difference. So, all sorts of people come into it. And you mentioned they're bridging, because also a big part of what we do is bridging in development finance for people getting into projects. And with bridging finance, most people, as you know, the lender will retain the interest, won't they, for the term of the loan. But there are cases where the client pays it like a mortgage, pays it monthly. But to be able to do that, they've got to be able to evidence affordability. So again, that income comes into it for the property developer.
Yeah. See, it's funny as well, because I know, and I get it, I totally get what I'm about to say, yeah. The advisors back at work, sitting there, helping people day in, day out, do a great job, fantastic, not taking anything away from them. But I know that they love the 50% loan to value, 2 times
vanilla
basic salary, clean case, because it's easy, isn't it? It's A to B in seconds, job done. Yeah. As the business owner, or one of them, I should say, I see it slightly different. I see the complex cases as good business.
Oh yeah,
because they can't really go and get it on the internet.
Yeah.
They need help. And normally people with complex income are very busy people.
Yes.
Yeah, time poor. And they don't want to go and sit in 6 mortgage interviews with a lender that are probably execution only, if truth be known, and they're not actually getting any advice and getting nowhere.
Yeah.
They just want someone to do it. So I know that when some of these things come in, when it's money from all over the place, it can be different source of income, as alluded to, irregular. Sometimes it might be coming in offshore, and it's where does this case go? And it is hard work, but that's what provides us with a lot of our business.
Oh, massively. And the gratitude somebody's going to have for that, because they know they're pretty complex. They're not easy. They can't just walk into any bank and get it. Then, that's a client that you've got for life if you look after them.
Yeah. And also as well, once people have been doing our job for a couple of years, it gets a lot easier for them, because they've dealt with the same scenario.
Yeah.
And I think the strength that we've got now for them, which makes life easier for them and the client for that matter, is there's quite a few people there now, and if someone gets a case, they don't quite know where this complex solution is.
Yeah.
Who's colleague sat next to him, or the team meeting in the morning. It's great when they just go, I'm struggling, and then someone goes, oh, I had that about a month ago. These lenders were the ones that could do it at the time. And obviously then you've got to go and price it to find which of those lenders is currently the best price one.
Yeah.
But, it's strength in numbers, isn't it?
Oh, massively. Well, across the departments, there's 10 advisors now. So between them, somebody's going to know the answer to 90% of challenges that we get.
Or they could just ask me and you, of course, because we know it all, don't we?
We do, but we're not always there, are we? We're flying around the world, so it's not that easy.
The world. Yeah, I wish it was. Oh, we did. We went to Mallorca, didn't we? But no, it's 40%. Yeah, I still think, wow. And now I think, actually, no, that sounds, if anything, it sounds maybe a bit low.
Yeah.
But again, it's another message to people out there, isn't it? Whether it's the residential, the buy-to-let, if we're needing some income for bridging applications and things like that, and it's all over the place. Don't just assume the worst. This is what we thrive on, isn't it?
Yeah, it is. And remember as well that we've seen that many different types of clients and some that have done extremely well, that we can impart that knowledge on other clients to help them accelerate their journey.
Yeah. In fact, it's word of mouth. Once we solve one person's problem, they often operate in the same circles, don't they? So all the friends end up piling in at some point. And no, I think it's an incredible start, but the more we talk about it, the more I think, bring it on. Let's have some more inquiries.
For sure, yeah. And it means that person, if they want to, they can choose to own a property instead of being a perennial renter.
Yeah.
Because especially you see it, there's a correlation with business owners and self-employed that, they stay renting for longer because they can't get the house that they know they can afford. So they just put it off and off and off. But it's partly because they don't know what they could actually borrow, what they could achieve.
Yeah.
So massively important that you speak to a good broker, us of course, and we'll go through the whole situation, make sure that no stone is left unturned, and we'll find the right home for that person.
And one thing to add on that is, because we've seen this time and time again, it's when you explain it, I just thought, what about when we've had people where they come to us with their complex situation and it doesn't quite, even with all our efforts, they're not quite going to get what they quite need. Mm-hmm. But sometimes it's a simple case of, right, you're about to report your income again or something like that. You maybe need to consider, doing it because within accountancy you can do things in different ways. You might push a transaction from one year to another if it's permissible. We're not saying fudge accounts. We're not saying that at all.
No.
But
there's freedom within the framework.
Yeah, or even some back down to the employed person who does work overtime.
Yeah.
But maybe in the it's getting a bit similar to a previous podcast. But what we can do is say, look, you need to make sure that you do consistent overtime to solve your complexity problem.
Yes.
So it's twofold, isn't it? One is often we can just resolve the issue anyway.
Yeah.
But B, if we can't, is give them the education needed to get themselves in a position.
We can help them strategize, can't we? Or plan ahead, plan accordingly.
Yeah, where the complex income isn't an issue.
Yeah.
Yeah. So
fascinating subject, and it's a fair old portion of our business when you think about it.
Yeah.
I know we deal with, 40% roughly buy-to-let, 60% main residence mortgages.
Varies, doesn't it?
It swings a bit.
Over time, 50-50, but at the minute,
But within the main residence sector, there's a fair old percentage there that will be self-employed and complex income. The market as a whole, 40%, but I think for us as a broker, it could even be higher than that.
So what's the simple solution?
Get on the phone. Phone us up. We're very simple people. Not that simple, but we're very simple people and we're easy to talk to. And all the advisors are experienced enough to know and help such a wide variety of client type. And if somebody doesn't know, they will just ask one of the team and between us we'll solve it.
Yeah. So jump onto the internet. Easy way to find us is www.expressmortgages.co.uk, or you can phone straight into the team on 01942 235 000, or alternatively just reach out, put a comment in, and we'll come back to you and we'll pick it up and we'll help you in any way, shape or form. Bye for now.
Bye for now.